Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we will take a look at the New Zealand dollar instead of the gold market, because in the gold market, as you can see, there's nothing really is going on right now. So some flirting and action inside of the triangle on the daily chart that we have discussed, and mostly markets are waiting for non-farm payrolls release. That's why hardly will see any significant action today as well. I just will show you briefly the picture of the 4-hour time frame chart that we have talked about recently. So if you see, as you can see, market just has completed our ABCD pattern here and hit confidence resistance at 1280 that we have discussed. But on the daily chart, it's really minor action, so actually nothing is going on. We need to break out of this triangle to get the final decision on the direction. Currently, gold market looks weak, and in this circumstance, in overall background that we see right now in fundamental side, it's mostly more chances that this breakout will fall to the downside. But while we are waiting for non-farm payrolls release, let's take a look at the New Zealand dollar. Previously we have discussed that some as political turmoil will come down a bit in New Zealand, the currency could turn in a normal direction where it was standing before this happened, and because the overall background for the New Zealand economy and the New Zealand dollar is not better actually, and that has been proven by the action that when it stands here, an overall action that we see on the high time frames. But as the political turmoil has started and has depressed the New Zealand dollar, and it has dropped significantly. Currently we will not talk on some far-going perspective, but I would just would like to warn you about some issues that we have on the daily chart. So now market has dropped down to the previous lows around the 6825 area and has turned to some upward action. The major question here, guys, is how to catch the correct moment where to take the long position, and how to do so that this entry will be relatively safe. My suggestion here is the same as usual, so wait for strong supports or completion of objective points of the extensions. That's why, guys, although market has hit these lows and even has started to retracement up, I think this is not good moment for taking the long position. Why? Because this upward action mostly stands in response to the daily oversold. Here, guys, the Dreadnought detrended oscillator. You could download it for free on our website. It shows the levels of the overbought and oversold. Just to prove you that the oscillator predictor that I usually use on the charts, these lines, actually the same as the detrended. So it points the same levels of the oversold and overbought. So if I'll plot here the oversold line as well, sorry, let's change the color. You will see that the reaching of the extreme lines by the trend oscillator and oscillator predictor happens in the same moment. So I will show you there where you could call for overbought levels, and you can see that every time when the market hit in extremes of the overbought, the oscillator predictor hits the tops here, bottom oversold here. So you could easily catch the moments where this happens. The trend oscillator has its own features. That's why very often I use both of the indicators, as the oscillator predictor as the trend oscillator, because the trended oscillator shows also such patterns as the breaking of the volatility breakout that you couldn't see on the oscillator predictor. So that's why, just to keep chart clear, I do not use the band for oversold and use the trend oscillator just to show you that market was oversold here. And the major issue, guys, on the daily chart is this ABCD pattern. And you can see market hasn't quite reached the target. It's 161 extension. Stands approximately 67, I suppose somewhere around 67.50, 67.55. So you could calculate it by yourself. But the major importance is that it stands below these lows, guys. And this minor this minor reaction should not deceive you. So this is just reaction on the oversold. This is not upward action. This is not some kind of reversal or something of that sort. That's why if you would like to take the position on the New Zealand dollar, it's better to do when the market will hit and reach 1618 extension. Also, guys, you could trade trying to take the short position with the downward continuation right to this target, because probably this target should be met and these lows hardly will survive because market has extension. Chances on the reaching of this extension is very significant because you can see that here market has shown very fast acceleration down. So bearish momentum here with this drop is really significant. That's why it's very high probability that market probably sooner rather than later, will turn down again and will hit this target. This is a major point that you should keep in mind when you're watching on the New Zealand dollar. What we have on intraday charts? The last moment here, guys. Here is very important level of 69.80. This will be daily overbought. It's very important. Well, we need it on the next chart. So on the 4-hour time frame chart, guys, what we have actually, guys, you can see market also has completed intraday ABCD pattern. That's another reason for this upward bounce. So completion of the ABCD right with the daily oversold has triggered this upward action. Now market stands above the weekly pivot point, and this lets us to suggest that the level which market could reach with this retracement stands approximately around 69.70, 69.80. That, guys, coincides with the daily overbought. And you can see here we have the fib level, here we have new monthly pivot point for November, and here we also see weekly pivot resistance 1. Weekly pivot resistance 1 takes the special meaning, guys, in this scenario. Why? Because we know that weekly pivot resistance should hold upward action if bearish trend is still intact. That's just the framework of the pivots, how we use them. And taking into consideration that non-farm payrolls is coming, and also that we on the euro currency also expect minor upward continuation. So that's the level to watch for possible taking the short position with the downward continuation. Probably could be reached today and tomorrow in the morning. Finally, guys, if you calculate the harmonic swings here, and clone and then drag it, dropped here, you can see that it points on the same area, 69.75, 69.80. That's the point where market could turn down. That's what we'll be watching for right now on the New Zealand dollar. So that's been said. On the New Zealand dollar, we suggest that market should move slightly higher, approximately for the 50 pips, reach this resistance around 69.80, and then start dropping to complete this target on the daily charts, 1618 extension, approximately around 67, right, 67.50. So that's our trading plan on the New Zealand dollar. So if you're trading New Zealand dollar, think about it. Maybe you will find something interesting and useful in this description that we have provided. And of course, bearish, if you have the bearish view, you could watch for sell patterns, sell signals around this area. If you have the bullish view and like take the long position, it's better not to do until market will not complete this 1618 extension.